Hello students. Topic of this lecture is working capital financing. Like how we are going to finance our day-to-day working capital requirement. For that purpose, we have some sources such as the short-term sources of finance. And it involves the trade credit. So trade credit may be in three forms. First is the sundry creditors. Basically, what is credit or trade credit? It is a credit that firms get from the supplier when they buy raw material on credit and defer the payment, maybe for 15 days, 30 days, and it arises in the course of business that is normal in nature. And in India, more than one third of short term financing is done through the trade credit. पूरी जो industry है, पूरा जो business है यहाँ पर ज़्यादातर सब trade credit पर ही based है. It is mainly important for firms that are small, as it is difficult for the small firms to get loans from the banks. So there are three forms of trade credit. First are the sundry creditors. Sundry creditors are also known as the accounts payable. So when credit is received informally on an open account basis and when there is no legal or written documentation of that, then we call it as sundry creditors or the accounts payable. No legal document is signed for debt recognition, but continuous deferred payments are made by the firm on supplier's faith. तो ये supplier के good faith पे based होता है. Second होता है bills payables. Bills payable, these are the formal agreements or the formal arrangements where the buyer's firm signs a bill to get credit from the supplier, which appears as bills payable in the balance sheet of the buyer. So it is used by the supplier when he lacks faith on buyer and he can claim it anywhere to collect their money back. So the bill specifies the maturity date before which the payment has to be made. And third type of trade credit are the promissory notes. So it is also a formal arrangement where the buyer firm makes a written promise to make payment at a specific future date. They are shown as notes payable in the buyer's balance sheet. Now, what are the benefits of the trade credit? So trade credit is used as a spontaneous source of finance and which is very easily available. And second important benefit is that there is no interest charged on that spontaneous financing, and it is a special importance for small firms who face liquidity crunch or liquidity problem and who have some difficulty in raising funds through other sources like banks and financial institution loans. And second is the flexibility. So it is perfectly flexible with the sales of a company. As the sales increases, purchase from the supplier also increases, which automatically increases the credit amount and vice versa. And thirdly, the informality. So since we know that especially the sundry creditors or the accounts payable where no written documentation is there, so these are some informal agreements or arrangements. Trade credits does not involve any legal formalities and negotiations, which makes it an attractive source of finance as compared to the other sources. Now, what is the cost of trade credit? So, cost of trade credit is not explicitly paid by the firm as it does not include any interest payments. But trade credits does have some implicit cost which arises out of the credit terms. And credit terms mainly specify the due date before which the payments has to be made and no cash discount is offered. So there are some cash discounts also to expedite the credit collection. For example, this is a particular credit term which specify 4 by 15 net 45. It means that if payment is made within 15 days, then a discount, or we can say a cash discount of 4% would be given, after which discount is not provided and payment becomes ड्यू ऑन द 45th डे. सो अगर 15 दिन के अंदर अंदर आप पेमेंट कर दोगे तो 4% कैश डिस्काउंट मिलेगा आपको, जो अभी आपको पेमेंट करनी है. और अगर आप 15 डेज के अंदर पेमेंट नहीं करते तो फिर आप 45 डेज बाद पेमेंट करो, और देन इन दैट केस नो कैश डिस्काउंट विल बी प्रोवाइडेड टू यू. एंड द second cost is the bank credit. So after trade credit, Second source is the bank credit. This is the second working capital source of financing. So after trade credit, bank credit is the one of the very important source of working capital financing or financing the working capital requirements. Banks are the main institutional source of financing working capital in India. Banks generally state the credit limit, which specifies the maximum amount that a firm can borrow for financing working capital. And there are various forms in which a firm or particular company can borrow funds from the banks. It involves the overdrafts, cash credits, purchase or discounting of bills, loans, working capital loans, and the letter of credit. So these are some forms by which bank provide credit. First is the bank overdraft. The facility of overdraft is provided in case of current account. तो इसके लिए जो भी ऑर्गेनाइजेशन है उसके पास अपना खुद का एक करंट अकाउंट होना चाहिए where an organization can withdraw funds from the bank more than the balance in the account up to a particular limit which is specified and a specified time within which it is supposed to be repaid, and the borrower has to pay interest on daily balance on the amount withdrawn from the bank. And it is a very adaptable mode of funds, can be raised anytime and can be paid back within the time limits easily through the checks. And second are the cash credits. It is same as overdraft facility. A कैश क्रेडिट अकाउंट इज मेंटेन, जैसे करंट अकाउंट है वैसे कैश क्रेडिट अकाउंट मेंटेन होता है फ्रॉम द बोरोवर्स फ्रॉम विच ही कैन मेक periodical withdrawals up to a specified limit and repay it in the account itself, that too within a specified period of time. And the borrower has to pay interest on his actual withdrawal, and the credit limits is granted against the security of current assets. And it is also a very flexible mode of bank credit for the borrowers. And the third is purchase or discounting of bills. So as we know that Reserve Bank of India introduced the new bill market scheme in 1970, in which the bills can be discounted with banks to get credit. And RBI introduced this scheme to reduce the reliance of firm on the cash credit to raise funds. And it was also predicted that this scheme will assist banks to deploy their surplus or deficits by rediscounting or selling the bills purchased or discounted by them. Then the third are the loans. Under this form, the current account of borrowers is credited with the full amount of borrowing. जितना भी total credit limit होती है उससे बैंक loan provide कर देती है. Since whole amount is credited, so borrowers has to pay interest on the whole amount. तो जितना भी टोटल अमाउंट मैक्सिमम लिमिट का जो अमाउंट आया है उस पूरे पे ही क्या है इंटरेस्ट पे करना होगा. देन द थर्ड आर द वर्किंग कैपिटल लोन्स. तो बोरोअर क्या करते हैं कुछ टाइम पर कुछ कभी कभी कुछ एडिशनल फंड्स भी बोरो करते हैं, कंटिजेंसी फंड्स, ठीक है, ओवर एंड अबव द करेंट अकाउंट लिमिट. एक सैंक्शन क्रेडिट लिमिट होती है कंटिजेंसी के केस में. एंड द बैंक्स प्रोवाइड लोन for such additional funds, and the borrowers have to pay higher interest over and above the normal rate of interest on such loan. तो जहां तक आपकी क्रेडिट लिमिट है वहां तक आप एक नॉर्मल इंटरेस्ट से लोन पे करोगे, नॉर्मल इंटरेस्ट पे करोगे, और ओवर एंड अबव दैट पर्टिकुलर लिमिट व्हेन यू एक्सटेंड द लिमिट यू हैव टू पे अ हायर इंटरेस्ट रेट. देन द नेक्स्ट इज द लेटर ऑफ क्रेडिट. लेटर ऑफ क्रेडिट को हम एलसी भी कहते हैं. The above source are direct sources in which banks provide funds as well as they bear the risk of default. But the letter of credit is an indirect source of bank credit in which the bank only assumes the risk of default because the credit being provided by the suppliers himself. क्योंकि यहाँ पर जो सप्लायर है वो वही क्रेडिट प्रोवाइड कर रहा है. एंड द परचेज ऑफ गुड्स gets the letter of credit from his bank, and the bank undertakes to make payments only when the purchase of goods defaults in making payment within a specified time. Now, these are some securities which are required in bank credit, such as hypothecation, pledge, lien, mortgage, and charge. After that, the third type of source of working capital financing are the commercial papers. तो ये बहुत ही important money market instruments होते हैं जो कि शॉर्ट टर्म क्रेडिट के लिए डेवलप किए गए हैं, and that is developed on the recommendation of Vagul Working Group, the Reserve Bank of India, which introduced the scheme of commercial papers in 1989. Commercial paper is an unsecured promissory notes issued by the borrower to raise the short term credit, और ये यूएसए में ओनली द फाइनेंशियल साउंड एंड हाईएस्ट रेटेड कंपनीज जो होती है, जो फाइनेंशियली साउंड, जिनकी क्रेडिट वर्दिनेस बहुत ज़्यादा हाई होती है, और जो साउंड फाइनेंशियली साउंड कंपनीज होती हैं, वही इशू करती हैं, जैसे कि जितनी भी ब्लू चिप कंपनीज होती हैं. The customers of commercial papers are banks, insurance companies, mutual funds, and other financial institutions. तो कमर्शियल पेपर्स जो परचेस करते हैं कंपनी से, वो बैंक्स हो सकते हैं, इंश्योरेंस कंपनीज हो सकती हैं, म्यूचुअल फंड्स होते हैं. मीन्स ये सब कॉर्पोरेट्स होते हैं, इंडिविजुअल्स नहीं होते. अदर इंडिविजुअल इंस्टीट्यूशंस एंड कंपनीज विद सरप्लस फंड्स. जैसे कि हम अभी कैश मैनेजमेंट में देख रहे थे, जो सरप्लस कैश होता है उसको कंपनीज इन्वेस्ट कर देती है मार्केटेबल सिक्योरिटीज में, लाइक कमर्शियल पेपर्स में भी इन्वेस्ट करती है. द फंड्स इन द मार्केट आर जनरली इन्वेस्टेड फॉर अ शॉर्टर पीरियड फॉर विथ मिनिमम रिस्क. Now, these are some advantages and disadvantages of commercial papers. Now, there is one more source of short-term finance or working capital finance, that is factoring. ये बहुत ही पॉपुलर है आजकल, बहुत इंपॉर्टेंट मोड ऑफ शॉर्ट टर्म फाइनेंस है, दैट इज फैक्टरिंग. इसमें बैंक क्या होता है, एक थर्ड पार्टी या फैक्टर बन जाता है, विच परचेज ऑल द रिसीवेबल बिल्स ऑफ द supplier company, and they discount it at a particular rate, suppose 80%, then the 20% will be the commission of the particular factor or the bank. They will charge as a commission or as a fees for maintaining their ledgers, their account, their accounting books, all the accounting data, and also for providing them the amount of the credit sales in advance, and for also bearing the risk of default, they charge that particular commission. And again, this factoring may be of two types. It may be the recourse factoring or non-recourse factoring. In case of recourse factoring, bank bears the risk of default in case the customer does not pay back to the supplier. Then bank bears all the risk for that, and in lieu of that they charge more commission or more fees, and the factoring charge is higher, and the discounting amount is less against the bills receivable. And in case of non-recourse factoring, bank does not take any kind of risk of default, and all the risk of default has to be borne by the uh, supplier party. Now, there are some spontaneous sources of finance also, which cater to the working capital requirement. It may include the accrued expenses, and it is basically a liability that a firm has to pay for goods and services which it has already received. Suppose companies have received some goods and services, they have availed, but they have not paid it yet, and they will pay it further after some time. And these may include the wages and salaries also of the employees, because there is practice in the small firms that they don't pay the salaries or the wages to the employees on the first of the month. first day of the month, but they may pay it after 1 week on the 7th or on the 10th date of the month. So for that 1 week or 10 days they can get some interest, and that interest may further create some kind of source of finance for them. And taxes are also there. Taxes, when they don't pay the taxes on time, they may delay that, and that delayed payment can also help them in fulfilling so many liabilities. And then the interest again, if they pay it on late basis, then also they can utilize that amount in other business activities. Similarly, there are some deferred income, and deferred incomes are the amount which the firm has received in advance for supply of goods and services in the future. Like many companies, especially those who does the production on you can say order basis, order on order, who produce, they take some advance, and that advance is actually a deferred income which works as a spontaneous source of finance for fulfilling so many day-to-day business needs. Now, these working capital requirement may be financed by long-term sources also, like shares, both equity as well as preference shares, debentures, term loans, or the long-term loans, you can say. But most of the short-term requirements of working capital, they are financed by the short-term sources such as commercial papers, bank credits, trade credits, spontaneous sources such as accrued expenses and the deferred incomes, and a very small portion of working capital that is financed by the long-term sources such as shares, debentures, and term loans. So that's it about today's lecture. Thank you, students.